Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, January 19th, 2023. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES right now. The previous session ended up seeing a strong high in the morning that led to a reversal back down. Selling pressure led by the YM. The Dow dropping throughout much of the morning. The ES and the NQ both found strong highs and sold off into the close. Stop run day down. High range days as well. Not significantly high range, but definitely high range days compared to the averages this year. We've now seen this thing rotate lower here in overnight and pre-market trading, but we're testing the key midline in the chart, 39.20. That's this level right now. 39.20 is a key line in the chart at the moment. That is the midpoint of the larger key range from last year. Now, if we're able to see a strong low this morning, do we then finish the day back above the previous session's close for a bullish failed new low? And does that trigger another round of strength that carries us into 40.85? So right now, quite a bit of weakness here so far in overnight and pre-market trading, but perhaps a developing low could be in play right now. If a developing low does come in play, is price able to overcome the previous session's close price? So we could be looking at a play that takes us back toward 39.45, the previous session's low, and perhaps even higher in the best case scenario. So right now, watching to see if this low hangs in there. If not, perhaps a failure here of 39.20 suggests that we are headed indeed back to the bottom of the previous month's low. So if you take a look here at the NQ, very similar price action as well. This was a strong high yesterday. It was above the prior session's high, which was not the case in the ES. This became an outside day down. You can see the sell signal right here. A bearish outside day down could be day one of selling pressure ahead. Especially over the next several days, even if it's the next 1 week of trading. And from that pivot high, if you forecast lower average weekly range, you're going to get somewhere in this zone right here, about 11K, 11,050, and that would take us right back to break even on the year. So if this is indeed day one of rejection, then the bears will be looking to sell any bounces here. Even a failed new high tomorrow could lead to weakness that carries us back down. So that's something we're going to find out here today. Is this day one, and do we finish lower today, or do we start to form some sort of rejection and buy the dip for another rotation back up? So keeping an eye here today. 11.4 is going to be the key level early on, and then you have the previous session's low and close, 11.468 to 11.482 as the level for bulls to overcome in the case of a bullish session. Taking a look here at crude oil right now, crude oil up about 0.6%, and this is similar to how the ES and the NQ could finish the day right here. Right now, they're trying to find lows. They're bouncing back, and I mentioned if it can overcome the close of the previous session, then you get yourself a failed new low that could look bullish here with the potential to see another round of strength. So this is how, in the most bullish scenario here, the markets could end up. Now, crude oil is that way already, which means a big retest right here will be very important, because a rejection there could lead to a continuation to the downside. This is going to be a big retest here at 80.50. 80.50 is also right around where weekly VWAP is. 80.37 is weekly VWAP. Right now we're at 80.19, 80.20. So again, after a major rejection in the previous section that saw a strong failed new high and a close below the prior mid, that right there would suggest some sort of rotation that could take us all the way back down within the range, back towards 72.5. So today, on this morning strength, do we see a lower high develop, and does that lower high lead to additional weakness up ahead? So keeping an eye on 80.50 here today. A pullback into that zone could be met with selling pressure that leads to another round of weakness up ahead. Taking a look here at gold futures. Gold futures has been very bullish, very bullish here. lately. Just this year alone, we've only seen one test of the 8-period average on these 2 days, and we've bounced back up. 8-period now rising to 1896.60. You see a 4-day narrow range that has developed now. Today has a very narrow range at the moment, inside days, and 60% of ADR at the moment. But if we bring out the 4-day range here, you'll see this compression right here, not quite compressed against the average, I guess. It's 68%. Ideally, in order to get one of these magenta lines here, you need below 65% of ADR. So we're right there at the cusp. If this thing were to go average on a breakout from this range, we could see a move of about 51 points. On a 5-period average, it's 50 points basically. So 50 points of movement could be ahead out of this narrow 4-day range. However, when you have a compression, you tend to go higher toward that 125%. That's 64 points. So somewhere north of 50 to 60 points could easily be ahead once we get a breakout from this range. So this is a good narrow compression. I would say obviously the directional conviction remains boldly higher, and any push to the downside here below 4-day lows could be met with rejection that ultimately leads to a move higher. So if we push downward and find a strong low, say that strong low is at 1890, you could forecast higher about 60 points, and you're going to get 1950 as the target up ahead. That's going to be about what we see here on a breakout, at the very least, somewhere between 50 and 60 points of range. So that's the idea right now, given the uptrend. If we do have one push to the downside through these 4-day lows, watch for a low to develop. That low could be then used to pivot off of and find the upside target. So about 50 to 60 points of range could be seen up ahead out of gold. Lastly, taking a look here at the YM. The YM has led the market lower each of the last 2 days, while the ES and the NQ and RTY were testing new highs on the sessions. The YM was selling off, and that happened 2 days running, and you can see now a big time move back across the range. We're back below the previous year's close, the previous month's close, previous quarter's close, and we are approaching the previous month's low already. So coming back into the bottom end of the zone already, a big time reversal and rejection, a failure to reach the December FOMC key level. This one clearly seeing quite a bit more weakness than tech at the moment, or even the S&P. But this range up here is very well developed, very well established here. It's a range of about 2 to 2.5 months in development. Parts of November, all of December, parts of January right now. There's quite a bit of energy. And if at some point sooner than later we start to break out of this range, it will lead to a primary move of about 2 to 3 months in that direction. That could be to the downside. So keeping an eye on this range right now as it develops here at these highs. A failure to break out to the upside could mean ultimately rotating back down within the previous range, with big time targets at 31.5 and back toward the previous year's low, 28.6. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.